皆さんこんにちは。クロスディグの中川です。今注目の方々にお話を聞いていくワンオンワン、今日は特別編、ブルームバーグのスタジオからお送りします。そしてゲストはアクティビスト投資家とも言われる投資ファンドオアシスマネジメントの創業者で投資責任者のセス・フィッシャー氏です。小林製薬はメルカリ、花王といった大手の注目企業に投資し、経営改善を要求しているんです。中でも注目は花王です。今オアシスは 5% 強を出資しています。成長ポテンシャルがあるにもかかわらず、それが生かされてないと主張しているんです。今月3月21日には株主総会が開かれます。それに先立ちオアシスは株主提案を提出したんです。独自の社外取締役の候補者を5人擁立するなどしています。来たる総会に向けてまさに今花王とオアシスの委任状争奪戦が繰り広げられているんです。実際花王の業績はコロナ禍に入ってから振るわず、収益性は悪化の一途をたどりました。2023年の営業利益は1996年以来の低水準だったんです。コロナ禍の外出控えで化粧品の売り上げが減り、中国のおむつ事業が不振に陥るなど苦戦を強いられてきました。で、オアシスが挙げた課題点が4つあります。1つがグローバル展開に消極的、2つ目がブランドが多すぎること、で3つ目がマーケティングに戦略がない、そして4つ目がリーダーシップの欠如です。一方で花王はいずれもすでに対処できていると言います。ブランドの削減だったり、中国のおむつ工場の譲渡であったり、2023年に構造改革を行った結果、2024年の業績は大幅に改善しました。ただそれでも株価はコロナ禍以前の水準を下回っています。これではアクティビストは満足しません。株主総会に向けてオアシスはどう動くのか、セス・フィッシャー氏に直撃しました。Thanks for joining us today.
Sure, thank you for having me.
Yeah. You often come to Japan?
Yep, every month.
Every month, okay. Like how long, a week? Or...
Typically for a week. This time I'm here for 2 weeks.
Mm-hmm.
So it depends on what's going on.
Okay, yeah. So you've been obviously investing in Japanese companies for a long time. So what does the investment environment in Japan look like to you right now?
The investment environment in Japan continues to improve, continues to get far better.
Mm-hmm.
There was once upon a time when you needed to figure out if management was interested at all in growing, if management would focus on profitability,
mm-hmm.
and actually you could visit 20 or 30 companies and only find one that were focusing on profitability,
mm-hmm.
or focus on ROE,
mm-hmm.
or focus on ROIC, return on invested capital.
Mm-hmm.
And nowadays that ends up being the majority of companies. So you have a lot more companies to choose from. We like looking at companies that we think are cheap to themselves from a multiple point of view.
Mm-hmm.
Most importantly, cheap to their potential.
Mm-hmm.
And so we're going to spend a lot of time trying to study what their potential is, spend months and months and months kind of digging through what their potential is.
Mm-hmm.
And then if it's cheap to itself and it's extraordinarily cheap to the potential, then we'll often invest in the company.
Mm-hmm. Okay. So, like you, the variety of activist investors come to Japan and bet on the companies, and we've seen a surge in investments like that. So, why do you think that is happening right now?
I think in general, Japanese corporates are more open to it.
Mm-hmm.
The Stewardship Code and the Corporate Governance Code invited shareholders to be participants in it.
Mm-hmm.
They realized that shareholders have a real stake and have real value to add to businesses.
Mm-hmm.
They could say something meaningful. They can help hold management accountable.
Mm-hmm.
And there needs to be more accountability for management.
Mm-hmm.
So effectively, they've been invited. Activists of all sorts, domestic and international activists, have effectively been invited in to help companies grow, and that's why the Nikkei is far higher than it was 10 years ago, and that's why, or 12 or 13 years ago, and that's why profitability is far higher. And that's why shareholder return is far higher, because all shareholders, active and less active, have been more actively voting their shares and helping kind of hold management accountable.
So you've been investing in Japanese companies since 1995. So
yeah.
When you look back on those, say 30 years, what were the inflection points for capital markets in Japan and like corporate reforms in Japan?
Look, you can go back into ancient history, right? in the late 90s when the Japanese banks were trying to restructure themselves, needed additional equity capital, and the companies were still very focused on paying down debt. And then we can go from clearly the bubble era and companies that had far too much debt, right, to like paying down debt, restructuring, paying down debt, and then even saving money, right? And we went through this like long period through 2013, 2014, 2015, when a lot of companies were trading in negative enterprise values. A lot of companies actually had far more cash than the market cap with zero debt. And we'd go meet the companies and we'd say, why do you have so much cash? And they say, well, you never know, there might be an earthquake. We said, that's true, but you might be able to borrow money for it. Or you never know, there might be another Lehman shock. So that's true, but at the worst case, you need 2 months of revenue, 3 months of revenue. You don't need to have 3 years of revenue. You don't need this much cash. And so they had been brought up in a generation of like, it's better to save than be a borrower. But they kind of had brought it to an extreme. And then part of the Abe's reforms and part of the Ito report and part of Metti's reforms and guidance and the TSE's guidance was, you know what? Try to produce a minimum of 5% ROE. Right? And Ito report said 8% ROE. Right? So that was one other important inflection point. So yes, the 3 arrows, fiscal, monetary, and corporate governance reform, Abe's kind of 2013, buy my Abenomics, kind of beginning of Abenomics was extraordinarily important point in this evolution.
Right.
And then all the incremental changes have been extraordinarily important. So every 9 months almost, one piece of everybody who's helping here, right? Whether it's the FSA, TSE, METI, the NGOs, whether it's shareholders, everybody turns the dial, so everybody expects more from management right? And expects more from corporates.
Right.
And so all those incremental changes have happened. We were the first people to be public, right? And back in 2017. That was another slight inflection point. And then continued inflection points are then going ahead and shareholders speaking up without even a campaign and voting against management in substantial numbers. And
Right.
so that's been other additional inflection points. And then hostile M&A by Japanese corporates on Japanese corporates, because companies have to be open to it, have been other inflection points.
Right. Okay. So how do you decide which company to invest in among a number of companies? Like, what part of the company's metrics do you focus on? You said cheap to potential, but what do you look at there specifically?
Sure. So we do a lot of screenings for companies that have subpar margins compared to their global peers. We then do a lot of work, research on those companies, like do they deserve to win? Should those margins be higher? Why are those margins lower? Sometimes the margins of the overall company is lower because they have money-losing subsidiaries. Sometimes it's because they have a bloated brand portfolio. Sometimes because they lack in marketing. Sometimes because their strategy is wrong. Sometimes an elevated manufacturer we've invested in was focused on new installs and not focused on maintenance. And the new install business is like a 5% margin business, and the new maintenance business between a 50 and an 80% margin business. And really the business model had changed. And they should have made that change, but they hadn't changed in 30 years, the business model, while all their competitors have. So sometimes it's simply business strategy changes. So we try to focus on what that is, and then is it realizable? Is that change actionable? How easy is that change to do?
Right. Why did you decide to invest in Kao in the first place?
Look, I remember Kao from more than 15 years ago, when Kao was a market leader in EVA, right? And they said, look at EVA, right? It's extraordinarily important metric, economic value add. Right? And they said, we're leading in that, and that's the metric you should stare at. But also if the company is really profitable or not. And so they said, look at that. And they had great brands and were producing a positive EVA. And then they went ahead and just kind of went into the desert and have not grown substantially and lost that shine for
After
a
the
long,
COVID
long
hit.
time. They've been, yes, actually under the prior CEO, right? They kind of lost that, and they lost that leadership, and they lost kind of focusing on profitability and EVA. They lost focusing on marketing. They lost focusing on kind of being at all pricing point, looking at your pricing policy, and looking at being at all its points of sales. And they've just lost enormous amount of ground to their competitors. You could see it in their margins. You could see a return of R&D. You could see a return on marketing. You see a lack of marketing spend. You could see it in their stock price performance and total shareholder return. They've underperformed the index and their competitors by more than 50%. In some cases like 70, 80%, depending on what period you look at. So the performance has been really, really, really poor. So we went out and said, oh, look at this. Their margins are subpar. Their stock price performance is subpar. Their earnings are subpar. What's going on? Then we went out and did surveys of their products. And we said, well, actually, people love their products. We talked to a lot of the competitors, and we talked to their competitors, and their competitors actually, we think their products are fantastic. I've heard the quote from two people now. If we could go ahead from the main competitors, right, the leading global competitors, that if we can exchange our products with theirs, we do it any day of the week. Meaning they have great, great, great products. They've bought and developed great products. Biore, Sensei, Orbe, Molten Brown, Corel are great products. Free Plus are great products. They're great products. The problem is that people just can't get them. People don't know about them. People can't get them. People don't have the supply chain. They don't go out. They don't do any social media marketing. They're just missing it from a strategy perspective, from an execution perspective. And so we thought that they're cheap. They're massively cheap to its potential. So we bought it because the multiples are okay, but it's so underperforming what it could be. And so we're thinking it's incredibly cheap to what the great company the cow could be.
So you call the company Japan's sleeping giant or sleeping beauty or something.
Yeah.
What made you call it like that?
Look, it is a sleeping beauty. It's a beautiful company with beautiful potential, but they're asleep at the wheel. They could go ahead and transform themselves dramatically. They could go ahead and kind of bolster global growth. They could go ahead and the social media followers, their own social media, their own kind of engagement in social media, their own kind of amounts of tweets they have and posts they have and screens they have and influence they have and kind of all metrics that you use today in modern media, they're just not doing. Or they're executing very poorly. Their e-commerce strategy is extraordinarily poor. And so we've gone through this business line by business line. Some of the brands don't have their own websites. We own some of their websites. We went out and bought some of their websites. They don't even own all their websites. It's cheap. Some of them don't have their own e-commerce store. You don't need to go ahead and take a high-quality brand and then have it go to the mass market brand's website. Have your own store online. I can build it for them in a night. It's not very hard. So these are simple fixes that would dramatically enhance profitability and enhance the brand's image and make them a global winner.
Right. But the company, the Kao, said that they're already working on addressing those issues. Like they specify so-called growth driver businesses and conduct the structural reforms to eliminate the number of brands across segments and worked on digital transformation marketing. At least that's what they say. But how do you respond to that?
That's what they say. That's not what they're doing. There's a lot of room that they can improve. They don't have the expertise to be able to do that. They want to tell us that President Abe, Sacho goes ahead and has digital expertise. He's been Sacho for many years already. We haven't seen it. Where is that expertise? Why don't you own your brand websites? Why don't you have better social media engagement? They don't even have a chief marketing officer, much less all the competitors have a chief marketing officer on the board. He told me, and he said publicly, we don't believe in marketing. The best products don't need marketing. He said that
to your face,
verbatim, to me, and he said that publicly in publications, and it's in our deck at abettercow.com. You could see it. What are you talking about? You sell lipstick and you sell soap and you sell beauty products. That needs marketing. It really needs marketing. People need to know. People need to be able to buy it, and they need to be able to see it, and want to buy it. And so it's a fundamental misunderstanding of the customer. And so the great brands out there, they all invest a lot more. Leading companies invest 4 to 5% of revenue. They invest 2% or under. So they're not investing in their brands and marketing perspective anywhere near they should. And he tells me he doesn't believe in it. We went through the example of Molten Brown. Molten Brown in pounds in the last 5 years went from 95 million to 105 million. Meanwhile, brands like Joe Malone, right, which is a competitor of theirs, have grown dramatically from something like in the 500 million to over $1 billion. Right? We've had brands like Aesop, which grew from 135 million or so to over 500 million in sales and revenues in the same 5 years. These are brands that Molten Brown, and we told them, what's going on? I asked them, what's going on here? Well, they have regular customers, we have seasonal customers, and seasonal customers are great. I said, great, you could have both. You could still have regular customers as seasonal customers. Why do you need to do all your business in December? You can keep that. But you need to make it relevant in people's lives all the time. You have Sakura season, you have cherry blossom season. Great, let's have a fragrance for that. Let's have a fragrance in the summertime. Let's have a fragrance in the fall. That's what everybody else does. Where's your focus on this? Right? Don't you want to grow? Don't you have ambitions? Don't you want to be an ambitious global winner? And so that's what I was trying. That's what I'm trying to help them do, and that's what these directors that we've nominated, I think, can help them succeed in doing.
Right. Well, the interesting thing is the many activist investors focus on the companies with discounted enterprise value, like less to PBR, the price book value ratio is less than 1.0 or something like that. But in terms of that, Kao doesn't seem to be one of them. So, you focused a lot on the global competition, like the comparison with competitors. So, do you see the company like differently from the other companies that you have invested before?
Yes, meaning I think that a lot of people are focused on the lowest value of kind of the hidden value of companies that trade at less than 1 times price to book. They focus on ones that like really balance sheet, and they're generally balance sheet activists and like very cheap balance sheets. And we're far more trying to create better companies. We're far more operational engagements. We're far more how do we grow the pie for everybody. Right? So they're talking about often like you should buy back your shares because your company's just too cheap. And I agree with that. And that's great.
Yeah.
We think that these pools actually make more money for everybody. And so, it takes a lot more time. It's a lot harder. This is a lot easier to do behind a screen. This takes an enormous amount of surveys we do, enormous amount of deep research we do in terms of media presences and going to points of sales all around the world and seeing pricing policies around the world, and requires a lot more work. But I think actually the returns are potentially much higher.
Yeah, I think the characteristic of Oasis is kind of in-depth, like screening of the company, and you often publish the website of the campaign, and that's kind of looks intimidating, like to companies or to other investors. So that's why people pay attention to it. But do you think it works out well, like in terms of engagement with Kao this time, or what do you think?
We've had a great track record of when we do have to publish, we prefer to send it to them privately and engage them privately. But if companies say no, we're not going to engage with you privately, they choose to kind of not open their mail and not engage with us, then we can't, as per the stewardship code, they can't just shut us out. We have not only a right, but as a signature of stewardship code, an obligation to speak up. And so yes, we publish our plan for them to hear from other shareholders. We're one of the shareholders. Sometimes they own 5%, sometimes they own 10%, sometimes they own 20% of the company. But there are other shareholders who speak up as well. We want to share with them the plans. And in some cases, to the extreme, like we've done in Kao, nominate directors, try to put in new compensation plans, hold management accountable, establish key KPIs. And so, yes, this has gone ahead. And now we have an additional information deck and even frequently asked questions now that people can go see at our website and see it. So is it intimidating for management? Management knows about this far before we're ever public. We've sent this to management far beforehand. We've tried to engage with them. We prefer them engage with us privately and them get all the credit. We want the company to go ahead and make these improvements. Business improves. They win. Their employees win. The customers win. We win. Everybody wins. When they pretend that they have the only say on it, and that they don't even have an honest dialogue with us or an open engagement, yeah, we'll be more public about it. If that's intimidating, well, it's not their company. It belongs also to all the other stakeholders.
Right. So, according to the disclosed documents by both parties, Oasis and Kao have had about 8 discussion sessions since September 2023. And it started out communication with investor relations department, and that eventually escalated to the management. How have you engaged with Kao over those times, and how did the conversation look like?
Extraordinarily disappointing. Not honest engagement, not fast engagement, not meaningful engagement, not meaningful dialogue. I've done this for 30 years. We've engaged with, lots and lots and lots of companies in Japan. Deep, meaningful engagements. This is amongst the worst that I've seen.
What do you mean by not honest?
Look, they want to say they engaged with us and met with us 8 times. We had to go ahead and publish a public website. We then went ahead and asked to meet with them, and we get 45 minutes scheduled with the CEO. That's it. 2 months later. Most people's engagement is great. And when can you meet? Tomorrow? The next day? That's the practice is great. You're a top 5 shareholder. Great. Let's meet tomorrow. Next question. Great. Let's spend as much time as you need. Not like we'll meet in 2 months' time. We eagerly await for it. And this is what happened. We eagerly await for the meeting. We only can find time in your schedule in 2 months' time. We're making fixes that could double revenue of the business, and you can't find time between now and 2 months from now? Okay. You find time in 2 months from now. Okay, we'll wait. We go ahead and do a meeting in 2 months' time. Then a week before the meeting, they go ahead and say, oh, we thought we were going to have an hour meeting. We do meetings every day in Japan, every day of the year. Every meeting's an hour or more. They send us a calendar invite for 45 minutes. Oh, so now I'm only going to get 45 minutes of Asebe's time? Here I have meaningful dialogues of how you could double margins. We don't want to spend more than 45 minutes doing that. And he reads a script for the first 20 minutes, and then I ask him specific questions, and the only data point he gives us, I think, is very wrong. The only data point he gives us is that 50% of the customers are men, when it's something like, as you said, 68 to 85% of the customers are women. So that's not meaningful engagement. I'd love to meet him today. I'm free right now. Whenever you want, I'm happy to meet. I ran past our headquarters on Sunday twice. I can walk over this afternoon. Let's have a meaningful dialogue about how to improve the company. Let's not go ahead. We send them director nominees in the beginning of November, profiles of fantastic candidates. Takes them 3 weeks to get back to us. I say, okay, give us our names and numbers. And then a couple of days later, right, the next month, they go ahead and nominate their own 2 directors. We did a massive comprehensive search, and they just nominate 2 directors who are in their pool. One of them is the director of a JV partners of theirs, and one of them is already a consultant to them for many, many, many years. No comprehensive search. And only after that, they go ahead and interview our directors. They have 2 out of the 5 people in the nomination committee perfunctorily interview the directors, and then takes 2 months to get back to us and just publicly reject them and actually insult the directors and create false standards for directors. You don't need to be a CEO of a company they claim to be a director of a public company. They should say thank you. They should say, this is great, let's work together, and let's, ganbatte, let's go ahead and be at it and be in it and improve. And instead, unfortunately, they've kind of gone ahead and just rejected them for no reason.
So the situation of engagement worse than that you did with the other companies?
Far worse. Far worse. Now, there are other companies that are bad, but this is the far exception on the bad part of the schedule.
So the management of other companies have tried to engage
management of other companies
proactively
engage with us, engage quickly with us, engage meaningfully with us. And appoint, if we think they need director nominees, accept those director nominees and appoint them as the management appointees. If they think we need strategy changes, hire people we suggest. If they think they need business strategy changes they can do on their own, engage with us on how to do it. They're very meaningful dialogue, sure.
Okay. But do you think there is anything you could do better to convince them to engage more?
I'm trying.
You're trying?
I'm trying. Every day of the week I'm trying.
Okay. So the Kao just announced their earnings last month, and they also mentioned the ROIC, the ROIC improved, or the financial results improved, especially in FY 2024. And it actually did. But do you think it can be seen as a sign of improvement for mid or long term? What was your reaction to that?
I'm super eager to see the UHO, the annual report. I think they changed the metrics that they use to be able to report.
Change the metrics.
They changed the metrics, I believe. I don't have that. I don't have confirmation of that, but we believe that they've changed the metrics.
But they disclosed according to the financial
I think they changed the
right?
policy last year. They haven't disclosed what the change
the policy.
I believe
what
so.
Kind of policy is that?
So how you calculate ROIC has some details, and I think they changed the details.
Okay. Did you tell the company? Did you
I'm
ask
open
them?
to talk to them every day of the week.
Okay.
Right? Yes, we'll exchange that with them as well. I'll ask them the same question at the AGM. What is the new metric? What was the metric, and how did you change it?
Okay.
So we think they've gone ahead and also now stripped out China from there to try to claim that cosmetics are growing, but they're not. Right? They've used Bandai Sands, the company they bought, to go ahead and show growth, but actually if you take that out, organic growth has been negative. And so you have to take apart the numbers and show what's really going on. They're trying to put their best cow on, they're trying to put their best face on, but it's still not a pretty picture.
So Oasis increased the investment over to more than 5% last December. Why did you make that move?
Look, I continue. The more work I do, the more work we do, the more that we think the Cow can be an incredible investment and an incredible company. We are highly convinced of that, and so that's why we own more shares. And we'd like to get management to agree to that. We'd like these directors to be nominated, we nominate to be elected to the board, and help hold management accountable to make that transformation.
Okay. Is Cow the biggest investment for Oasis now?
We have a number of companies of close to similar size around in the same area. Most of those are private, and we're happily engaging with management privately and happy to share their performance.
So it's definitely one of the biggest.
It's amongst the largest.
Okay.
It's amongst the largest.
Why did you
certainly a top 10 investment for us.
Why did you make it in top 10?
I think it deserves to be. I think this is classically what we like. Companies that are cheap, but most importantly, cheap to their potential. This is incredibly cheap to its potential.
Okay.
We just need to have some people change their minds, and we need shareholders in this case to go ahead and speak up.
Right.
Do you remember, these directors are all additive. They cohesively can work together, and they're additive to the board. There's no downside in electing them.
You're not opposing.
We're not opposing anybody. We're not opposing Asebe. We're not opposing the CEO. We're not opposing Shinobi. We're not opposing the chairman. We're not opposing any other directors.
Okay. So, how are you getting ready for the AGM in about 2 weeks? Are you talking to other shareholders?
We're actively speaking to other shareholders. We're going to hold a shareholder investor day here at the Okura Hotel on Thursday. So everybody, retail shareholders, can get in person and meet the directors and see this incredible quality of directors that can help spur Cows to its next stage of growth and create a better Cow. We continue to hold one-on-ones to institutional shareholders. We continue to hold webinars for them to meet the directors. So we want people to understand the opportunities that exists and the quality of directors that we found to help Cow become a better Cow.
Right. So ultimately, what kind of key results are you looking for? It might not be just letting your independent director candidate into the board, or it's just not that. What are you looking to do for Cow?
I want the company to do better. That's what I want. I think the directors are the best. All the directors, voting for all the directors is the best path forward. I think in shareholders should vote for proposition 4, 5, 6, and 7 that are going to add the directors and add measurable compensation, for the CEO and internal directors. And so that's this step. But what do I want to see the end result to be? I want to see revenues grow dramatically, and I want to see margins increase dramatically. I want to have access to Molton Brown on the shelves and the important points of sales in America. I want to have better access to their Free Plus and Bureau, and I want Bureau to be all over the states, and I want them to grow, and I want them to have, not that Japan is going to shrink, but I can see a world where international is 65% of their business, and Japan is only 35%, as opposed to the opposite way it is right now.
Okay. So Kao is not the only company you invested in, and Seven & I, you invested in that company, and then maybe the current CEO seems to be stepping down, and the other acquisition proposal from Kushtar, and so how are you reacting the recent corporate action of Seven & I so far?
The world is changing every minute, it seems, and there's new headlines every minute, so we're just continuing evaluating what's going on.
Are you talking to the management of the company?
I can't talk about that.
Privately?
I can't talk about that. I can't talk about that at all.
Okay. But are you seeking any action in the future?
No comment.
Okay. So about Kobayashi Pharmaceuticals, that you just finished the AGM last month, and your proposals were rejected, but you're going to sue the company. You're planning?
We're going to continue our actions with the company. Yes. We're going to continue our engagement. We're in this for the long run. We're going to continue our engagement. In this case, we stood up at the EGM, and there's an AGM coming up as well. We can continue there as well, and apologize to other shareholders for not having engaging more forcefully and earlier. 401 people died because Benny Koji. They didn't go ahead and do a comprehensive third-party investigation. They really didn't end the Kobayashi family's influence on the company. What's going on here? People died. There were 9 incidents beforehand where the independent directors should have gone ahead and said, make sure they have safety and procedures in place. They didn't report it to the board immediately. The board, when they got it, didn't take immediate action, or by email, and then they finally took action in person. They limited the scope of investigation, had the investigation only done by the law firm that's paid to defend them. That conclusion from that investigation said we need to have a really independent, broader scale investigation. They didn't implement even that. They didn't even implement the projections, the suggestions that their committee had. There's lives are at stake. Corporate governance. Yes, we're talking about often enhanced wages, enhanced returns for every retail shareholder in Japan. But in this case, corporate governance could save lives. Enhanced corporate governance could save lives. It's incredibly important. And yes, we can continue.
Right. Okay. And the one company I wanted to talk about with you is Mercari. You invested in the company last year, and now your investment is more than 5%. So you haven't really talked about this, but how are you engaging with the company?
You know what? I think I see real value in Mercari. They have a very good business here in Japan. I'll keep the rest of our conversation with them private. We'd like to continue keeping that private for now.
Have you met the management of the company?
Yes, I have met them. But let's keep the contents of those conversations private.
Is the engagement meaningful for you? Or?
They are making certain changes that I applaud. I'd like to see those changes being done fast. I'd like to see their implementation, but they are clearly on a road of improvement, and I am happy to see and hold them accountable to that improvement.
What kind of changes are you referring to?
They've wasted a lot of money in the past in the U.S. This is no secret. They've not been successful in doing that. They've shrunken that dramatically. They've focused on their core business here. And so they've been some absolutely positive steps they've taken. I want to encourage the positive steps, and we're going to continue watching if there's any non-positive steps.
So in terms of being cheap to potential, what can you say about Mercari?
Mercari has had a cash cow here in their business. That's great. Right? And so there's one approach with the company as to be a great shareholder and say, great, focus on your core competence and stop burning money and wasting money on other things. And the other way, you say, great, you know what, you've been Shintaro-san has been a visionary entrepreneur, created a big business. Can you do it again, and where? Now, if you look at companies like Facebook, Meta, right, which went down an alley and then kind of went back to their core competencies. Two, in this case, they had, I think, too long an experiment, and they said they were going to cut it, and then they didn't. They said they were going to cut it, and then they didn't, and they finally had made more proactive answers. They've also said more positive things about focusing on shareholder returns. But this could be an incredible investment if they focus on their core business and focus on enhancing shareholder returns and not wasting any more money than money they've already wasted.
So you're not going to publish the public campaigns about Mercari?
We're happy to kind of continue to engage them privately.
Are you seeking to do the proposals for the AGM in December?
I have no comment on this.
Okay. So before we wrap up, I wanted to ask I was interested in how you got into the world of investing, world of active investing. It's like a vision of your story. How did you get into the world, this world?
Look, I started investing in 1995 at a fund. And I looked at convertible bonds in Japan originally, and they were extraordinarily cheap. I was living in New York. And after looking at them for 2 nights in New York and 2 days in Japan, we bought a portfolio, and then I've been working Japanese hours ever since. I used to come to Japan back in the late 90s and visit companies and say, wow, what incredible potential. This business is they only focus on making money. They'd have pet projects that were money losing. They'd have family involvement in other projects that were just money losing or not returning, returning 0, 1, 2% ROE or ROIC. They had some businesses that were losing money consistently year in, year out. And at the time, they weren't really interested in our opinion. I'd go and listen to them. And then I was told very early on, they're not interested in your opinion. And I'd listen and understand, and some companies we invested in, and many companies we didn't. And then I went ahead and sometimes I'd be a little more bold privately in a meeting and say, why you focus on this? Why are you in this business? It's a charity. It's not a business if it's money losing every year. And some of the companies said, well, can you help us? And those companies are ones that had like really bad money losing businesses and needed help. And so we'd engage privately throughout the 2000s, privately with companies to improve their businesses. But that was only when we were invited in. We only became public engagement with the beginning of Abenomics. With the beginning of Abe actively inviting us in, we engaged at first with Nintendo to go mobile. And that's all well known about everything go mobile, lead to the Switch and going ahead and working on the monetization of your characters, and that's movies, and that's cartoons, and that's theme parks, and that's everything they've done. And that's been an incredible successful story for everybody involved. Right? For Nintendo, most importantly, and for all gamers and all fans, everybody's won. And then we continue to be more and more engaged. And invariably, as I said, 90-95% of what we're doing are private companies, a private engagement. Public companies are private engagements. And I'd love that to be 100%. But some companies are not interested in yet improving, and so we end up being public. And that's what led us to a better cow.
Okay, great to have you.
Great, thank you.
Thank you for your time today.
Sure.
Thank you very much.
Thank you.